welcome back once again to my channel. In this episode, I'm going to take you through how to read and understand the anatomy of a candlestick. Now, what does candlestick mean? That's the first thing we are going to look at. Now, candlestick simply means the graphical representation of the price of a particular product or an asset or any other financial instrument. The graphical representation of price or the price of a financial instrument. So you should take note of this key term, price. We are talking about price. So the candlestick is just about the price of a particular asset. Okay. Now, when you go to any other market in the world, there are two groups of people. We have the buyers and then we have the sellers. So the graphical representation of price actually shows these two groups of people. So when you see on any other financial chart, when you see green candlestick, it represents buyers. It represents buyers. And when you see red candlestick, it represents what? Sellers. Now the buyers in the market are called the green candlestick, which represent the buyers, is called bullish. It's called a bullish candle. And then the red candlestick, which represents sellers, is called a bearish candle. Now these two terms are mostly used in the financial space when it comes to crypto, when it comes to forex, and it comes to stocks. Bullish candle represent buyers and then bearish candle represent sellers. So you need to take note of these key terms. Now, like any other thing, when we say anatomy, it simply means the part of something. Okay, so anatomy of candlesticks mean the part of candlestick. So we want to look at the various part of the candlestick, which is one of the basic requirements to be able to read and understand what is going on within a specific time frame. Okay, so each candlestick you see here represent each candlestick you see on any financial chart represent a specific time frame. So it could be 1 minute, it could be 5 minutes, 15 minutes, 30 minutes, an hour, 4 hours, a day, week, months. It depends on the specific time frame you are viewing the price of that asset. Okay, so we want to look at the various parts and then how we can be able to analyze. So first of all, we want to look at the bullish candle. Now, when you take the bullish candle and then the bearish candle, both the filled part of the candle is called the real body, or it's called the body of the candle. It's called the body of the candle. Now, when you look at the candle, you see some thin lines below and above the candle. Now, these thin lines are called shadows. In other words, you may see wick. You may see wick as in W-E-A and K. In other books, it simply means the shadow of the candle. Now, the lower part of the wick or the shadow is the low, okay, or is the lowest point price got to, and then the highest point is the highest area price touched or price got to. So we have the high, we have the low, and then we have the open. So price opens as a specific price within the time frame, and then it closes at a specific price. So with a bullish candle, you always notice that the closing price is always above the open price. That is what makes a candle a bullish candle. When the closing price is above the open price, it means that price moved from a low to a higher point. It moves from a lower point to a higher point, and that means bullish or buyers are in control of the market. Therefore, they have moved the price low from the opening price to a higher price, which is the closing price. Now, when it comes to the bearish candle, the various parts are also the same. We have the high, we have the close, and then the open, and then we have the high and then the low, and then we also have the open and then the closing price. Now, the opening price and the closing price are the two important parts of the candle. You should know the opening price as well as the closing price. So for the bearish candle, you will notice that the closing price is below the opening price. unlike the bullish where we have the closing price above the opening price, the bearish candle always has its closing price below its opening price. Okay, meaning that the sellers push the price lower. They push the price from the opening point lower, and then price closed at this point below the opening price. Okay, which makes the candle a bearish candle. So you should take note of this. The two main differences that exist between the bullish candle and then the bearish candle are the opening price and then the closing price. The opening price and then the closing price. So once you see a candle which has the closing price above the open, it means it's a bullish candle. And then once you see a candle which has um the close below the open, is a bearish candle. So these are the basic, or this is the anatomy of the candlestick. This is the anatomy of the candlestick. Irrespective of the shape, these parts still holds. All right, now let's look at the candlesticks shapes and sizes. When you open any financial market, you realize that both the bullish candle and then the bearish candle have different shapes or sizes. So here we want to talk about size. You could see that some are very small. You would see a small candle, and then you see a very long candle, which are both bullish. The same way, when you come to the bearish, you see a very long bearish candle, and then you also find a very short bearish candle. Now what does this mean? Now this simply means that when you see a long bullish candle, it represents a high buying pressure. It means that there are a lot of buyers in the market, therefore they push the price very high within a specific time frame. So when you see short, it simply means a less buying pressure. The buying pressure is low. The same way, when you see a long bearish candle, it means that there is a high selling pressure, and when it is very short, it means there's a less selling pressure. So these are the two differences of the size of the candle. Okay, now when it comes to I've already explained this. Long bodies refer to strong buying or selling pressure, and then short and small bodies indicate little buying or selling activity. Okay, so that is the shape, that is the size of the candle. Now when it comes to the shape, we have different shapes, and each of the shape tells you what is happening between the buyers and sellers in the market. So that is what we are going to look in our next episode. In our next episode, we are going to look at the different shapes that we have, or we want to look at candlestick pattern in general. Now candlestick pattern in general is what actually communicates to you what action you should take in the market, whether to buy or sell. Okay, so we shall be looking at various shapes, what it means. In fact, the names we have here does not really count. What counts is the shape that is formed, and then the psychology behind it, whether buyers or sellers are in control of the market, or whether the market is turning a 10. All these things shall be looked at in our next episode. So don't forget to stay updated by subscribing and turning on the notification bell, and then you can also leave your comment right in the comment section. Note that this is a requirement. You should be able to read and understand any other financial market. Okay, so follow me as we journey on this topics, so that we can get the requirement that we will need to be able to read and understand any financial market in the world. Thank you so much and have a nice day. I will see you in my next episode.